Okay guys, today is 3rd October 2015. We have just had a look at the weekly chart of gold, which was giving us the long-term outlook, and basically this is the chart weekly, and we have intermediate waves 1, 2, 3, 4, and we expect that wave 5 should now be developing to complete the impulse structure from 1921 levels. So I want to go down to the daily 4-hour, 1-hour chart to look at this action from this intermediate wave 4 and see the way this wave 5, intermediate wave 5, is developing. So daily chart, we have our intermediate wave 4 here, and since this intermediate wave 4 at 1206, at around 1206, we have had an impulsive drop, making minor wave 1 in blue and minor wave 2, counter trend rally wave 2. Then we have here minute wave 1, wave 2. We look at them closely in the shorter time frames. When we go to the 4-hour chart, this is what we have. The subdivisions for, since the intermediate wave 4, subdivisions now we have 1, 2, 3, 4, 5, making minor wave 1, A, triangle B, C. These are flat, making wave 2. Then a leading diagonal, making minute wave 1, counter trend move, WXY, it's a combination, making wave 2. Then just the week before, we have had wave 1, and on Friday, the 2nd of October, I believe we completed this wave 2. So if we look at it on the 1-hour chart, this minute wave 2, the drop from that is 1, 2, 3, 4, and extended 5th. Then what we have here, minute wave 1, minute wave 2. So this wave 2, it appears to me to be an expanded flat, whereby we have A, B, C, and channeling for this drop is also very good, because you can put a channel on the ends of waves 2 and wave 4, then the parallel trend line on the end of wave 1 comes to nicely touch the end of wave 3. Then wave 5 almost touched the channel, which is good enough. So we have had wave A, wave B, and wave C. Also in terms of Fibonacci, we expect that this wave A, this wave C, in a flat triangle, zigzag, impulse wave, they should be related. The waves which are moving in the same direction, like this wave C is moving in the same direction as wave A, they should be related to each other by a Fibonacci multiple. So this wave C here is about 4.236 times wave A, and we can use our Fibonacci tool here, put it there, the end of wave A, then the beginning of wave C. You see here, have it there nicely, 423.6, that is 4.236 times wave A. So I suspect that in gold we should now move down immediately from this level. This is about 1141.11. We should immediately going into next week, as from 5th we should be immediately, we should first take out this B wave here, down here, B wave ABC, take out the B wave here and continue down in a strong impulsive third wave. That's my outlook for gold for next week. So I want to enter. I'll be going short at current levels, or maybe somewhere below here, because by the time Monday arrives, I expect that the gold will have retraced a substantial portion of this C wave. So I go short, put my stop loss here, 1141.28. That is my outlook for next week. You'll be able to follow this trade, and we will know if we are wrong, because that's the beauty of Elliott waves. There are always points at which, when the price reaches, you know that you are wrong. So in this case, we will know that we are wrong at this level, 1156.88, because that is now what we have here is a dropping impulse, wave 1, wave 2. One of the Elliott wave rules is that wave 2 can never retrace more than 100% of wave 1. So if this movement goes beyond here, this will be the beginning of wave 1. It's wave 1. So that means it will have retraced more than 100% of wave 1, and that is not good. So we will have to change our levels if that happens next week. But as I said, I expect that it should be dropping strongly below 1100 in gold, and this trade should give us at least 3000 pips. We will be able to see how it develops. Thank you.